attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just two girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The Speaker does not have to actually advance the bill to the, if we pass it in the House, does not have to actually have to send it to the President for signature. She can hold on to that bill for a while. So there's some flexibility in terms of how we mesh the two mandates.
The uncertainty down in Washington, D.C. John Yarmouth there, the House Budget Committee Chair, speaking on Fox. From New York City this morning, good morning. Alongside Tom Keene and Lisa Brammertz, I'm Jonathan Ferro. Waking up Monday to some risk aversion out there. We're down about 60 on the S&P. We're negative 1.33%. The Hang Seng over in Hong Kong getting beaten up off the back of the issues with Evergrande. Two key payment dates coming up. One today for some bank loans, and then on Thursday, some interest on some bonds come due. Yields come in on 10-year treasuries down to 133. We come in 3 basis points. Commodities not doing great this morning, down 2% and change on WTI to 70.36. And Tom Keene through G10, there's some dollar strength out there. Euro dollar 117.13.
I'm going to call it dollar strength there, and yeah, I think it's right to watch Euro John 117.13. You always go to Euro Swiss here, and it doesn't give me much information right now. Either does Anne-Marie Horton, because she, me, John, Lisa, we don't have a clue what's going to happen in Washington this week. Our Bloomberg Washington correspondent will sort through the debris. Anne-Marie, an open question. How is the debt ceiling linked to the migration from 3.5 trillion to a lower statistic?
So these are two separate things. The $3.5 trillion is reconciliation package. The debt ceiling, what potentially we're going to get a vote on this week is what the House said, is this is actually two different plans we're going to have to watch through Congress. This is one, a suspension of the debt ceiling, and also a continued resolution, so an appropriations bill, to make sure we can keep the government open. And that would only last till early December. And on top of that, will also be aid to the likes of for Afghanistan, that refugees coming over from Afghanistan, as well as from those hard-hit places by Hurricane Ida. We will know at noon, likely, how the Democrats are going to proceed with this. Will these two issues be linked or not? This is going to be another showdown this week because we already know the Republicans will not vote in favor of raising the debt limit, and potentially Democrats are just going to have to do it alone.
Well, they're going to have to do it alone, and it seems like they're alone, but I believe they need 10 votes for debt ceiling. What happens if they don't get 10 votes for debt ceiling?
They don't get 10 votes, they're going to have to put it as part of their budget reconciliation. And Representative Clyburn, who basically said this on CNN, they do not want to do this alone. They want it to be bipartisan. You heard what Treasury Secretary Janet Yellen in her opinion piece to the Wall Street Journal saying this should be done in a bipartisan manner. Much of this debt, 97% of it, was done under prior administrations and prior presidents, asking Congress, urging them to act together. But at the end of the day, someone has to cave, and the individuals who have the power are the Democrats, and they're able to put this in their reconciliation package.
Here's the quote from the opinion piece in the Wall Street Journal from Secretary Yellen. Neither delay nor default is tolerable. The past 17 months have tested our nation's economic strength. We're just now emerging from crisis. We must not plunge ourselves back into an entirely avoidable one. Words of Secretary Yellen of the Wall Street Journal. I think the question a lot of people have, Anne-Marie, is what is the deadline? And there doesn't seem to be a deadline here.
Yeah, there isn't a deadline. We don't know the exact date. It's some elusive date within October. And there's a specific reason for that. If the Treasury is going to give an exact date, but potentially it's off by even a few days, that could be financially very, very dangerous in the sense that if it's too early, politically, Republicans may say, oh, you were just trying to force us to act. This is too early. But if it's too late, they could find themselves potentially in a technical default. So they're keeping it to some date in October, but obviously it's coming up very, very soon, and Congress needs to do something about it.
How much has Senator Manchin gummed up the works by basically pushing back against a near-time vote, basically saying he wants to wait until 2022 to really start to talk about the $3.5 trillion infrastructure?
This is going to be the biggest showdown between the Democratic Party, and you're already seeing it not just from Senator Manchin, who's asking for that strategic pause, but Politico just a few moments ago saying that Kyrsten Sinema had said to the president in that meeting last Wednesday that the House needs to vote on bipartisan infrastructure September 27th. Now, that is Monday. That is a week from now. And if they don't vote for it or it fails, she will not vote for reconciliation. This is really the problem the leadership has in the House. This is coming up on September 27th, and this is going to be whether or not they push forward that bipartisan infrastructure. And what you heard from Representative Yermith on CNN, that sound you just played, was the fact that he thinks there's a little bit of wiggle room. Maybe the House could pass bipartisan infrastructure, but not send it to the president's desk. But this is really where it's going to be high stakes and a very delicate dance.
Anne-Marie, a lot of market participants are looking at what the policy risk here is. If the $550 billion infrastructure bill gets passed and there are no new taxes, which is what some people are thinking, that might be a net positive. Whereas if the $550 billion physical infrastructure bill is at peril, that becomes a real problem. Which is it?
Well, Democrats have said from the beginning, Lisa, that these two bills will move in tandem. Now, I just spoke a lot about what the House moderates on the Democratic side want to do, and that's to pass this reconciliation package by next Monday. But you're already hearing from progressives saying they will not have the votes if they don't have reconciliation. And what's so hard for some of these House moderates is that they want to see what the Senate is willing to do. What is Sinema? What is Senator Joe Manchin? What are they really willing to vote for? Because they don't want to put their name on the line for some controversial political votes a year before midterm elections.
Anne-Marie, our Washington correspondent down in D.C. Thank you. TK, it's getting messier and messier.
Yeah, it is. I think there's a real switch this weekend, John, and it goes with the calendar. John, I'm going to say this before. In the old days, the kids went back to school the Wednesday after Labor Day, and the world recalibrated the Thursday after Labor Day. That's not true. It starts on a given Monday, mid-September, and in you go. And that's where we are right now, starting on this Monday to get to Wednesday in the Fed meeting.
Let's talk about what happens every single Friday. Every single Friday at about 10:05, Tom and I go for breakfast together, and Tom sits there after we've had, what do we have, a Greek omelette, TK? You sit there and you tell me, what are you doing this weekend? I tell you and you say to me, you're watching Ted Lasso. And I say, I'm not going to watch Ted Lasso. And you say, please watch Ted Lasso. And I still haven't watched Ted Lasso. Ted Lasso just taking home the Emmys, Tom.
John, I have to watch it with the script on the TV screen because I can't understand a third of the words.
Basically, you want me to translate.
I want you to translate it for me. I mean, the guy that's Dutch in the locker room, I have no idea what they're talking about. This guy's from Kansas, and that's all you got to know, John. This is an ancient tradition, and the creative energy of the country comes out of nowhere. This kid came out of his comedy at Second City and SNL out of, I believe, Overland, Kansas. That says a lot.
Why did you not wear your velvet suit? I mean, you have a tan suit. I was really expecting a blue velvet suit.
No, I have that. It's at the dry cleaners. Madame Paulette has it right now.
On a serious note, what do we make of these streaming companies, Tom? The likes of Apple Plus, Apple TV, taking this home?
Well, we've seen Apple in the last number of weeks say they're going to pony up another $500 kajillion towards creative. John, I don't think it's any different than the record business from years ago in that they throw 10 things at the wall. Oh, no, I'm wrong. They show 20 things at the wall and they hope a Ted Lasso sticks.
Well, Ted Lasso stuck, that's for sure. Futures this morning,
what
down
60. What I know
60.
is they would have done better against Chelsea. Richmond would have done better against Chelsea this weekend.
Than your Tots.
Than the Tots.
Getting crushed 3-0.
Oh, that was ugly.
What a second half capitulation from your side. Yields in 3 basis points on 10s, 132.94. It's defensive out there. Equities lower by 1.3%. From New York City this morning, good morning. On TV, on radio, this is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Two weeks of losses coming into Monday on the S&P 500. Good morning to you. Here is the Monday morning price action. We're down about 60 on the S&P, negative 56. We're negative 1.27%. We're taking some more weight off the NASDAQ, down by 1 percentage point. The pain in the small caps, negative there by 1.8%. And we're all teeing off this right here. Switch up the board and get to the story out of China. Remember, onshore, Chinese markets closed for today and tomorrow. That means we look to the Hang Seng over in Hong Kong, down by 3.3%. We look to Evergrande, that stock is trading with the volatility of a penny stock right now, down another 10 percentage points. And dollar CNH, Tom, look out for that currency weakness, starting to come through just a little bit over the last several days for the Chinese currency offshore. The next key dates for you. First one comes today. The interest payments on bank loans due today, largely expected not to make them. Evergrande's next stop Thursday, some interest payments due on bonds, Tom. That's going to be the focus. And to Lisa's point, the jitters, where's the plan? Where's the plan, Tom, from Chinese authorities? And right now, TK, they don't seem to have one.
You know, their plan is going to be late at night. They're going to go into 7 p.m. our time, rather, early morning their time. And John, their plan is a tradition of into Friday or particularly into our Sunday evening. So maybe it waits a couple days here.
We're going into Wednesday.
Yeah.
The Federal Reserve decides to switch up the ball and get to the bond market. 2s, 10s, and 30s. Yields come in. It's a defensive morning. This is what you would expect. We're down 3 basis points on 10s to 133. On 30s, in 4 basis points to 186. And TK, we discussed it at the top of the hour. Tapering on Wednesday, I don't really know anyone that was expecting an announcement on Wednesday anyway. And if you're not expecting an announcement, you're probably not going to get one. This is about how we tweak the language, so to speak, to tee us up for something maybe further down the road, into November, into December.
I like the word tweak there in terms of so many things going on at this point and what we're seeing here among policy as well. Andrew Hollenhorst drives forward the conversation with Citigroup, their chief U.S. economist, and maybe it's a slowdown Q3, a pickup Q4. And then it's a complete mystery. What is the most mysterious part of the mystery known as economic 2022?
I think if there's one big mystery out there, and maybe the most important mystery also, it's what's going on in the labor market right now. How serious are these worker shortages? How long will they continue for? So we know that we're in an economy that's constrained by the supply side. And the big question is, how significant is that constraint and how long will it be with us?
Well, the constraints there, and it wraps around a consumer as well. The consumer is linked in supply constraints and particularly linked into the challenges and prosperities of China. How do you link American consumption, 70% of the economy, into the dynamics we observe out of Hong Kong and Beijing?
Yeah, it's interesting, Tom, because if you do the kind of direct effects that economists will do,
go to 3 decimal points.
Yeah, you get relatively smaller numbers. The issue, of course, is that if you get a general risk off in financial markets, a general concern in financial markets, then we find that global economies become much more correlated. We saw that post-2008, for instance. So you always have to watch these global risks, even if when you kind of run the numbers on these things, the direct effects look relatively small.
Walk me through the China issues right now, then, as far as you see them, Andrew, to the United States. If you're at the Federal Reserve, and they've faced this a few times over the last 10 years, risks coming out of China, how would they face this one down this time around?
That's what's so difficult for the Federal Reserve. Of course, as the Federal Reserve, you are controlling primarily what's happening domestically, and your monetary policy should focus on domestic issues, but you have to take into account any exogenous shock, right? Whether that be concerns about the debt ceiling, which you were just talking about, concerns about what's going on externally. So I think that's what Fed officials are trying to navigate here. Now, I think they feel they're in a pretty good place because we have very accommodative financial conditions right now. So they'll probably still be confident in proceeding towards tapering. But, you know, as always with the Fed, probably leaving lots of optionality, lots of contingencies there in case something happens down the road. They're not going to set themselves on a preset course.
Andrew, a lot of equity analysts are very focused on whether supply chain disruptions are transitory. That's one of the key aspects with margin pressures. Does the Fed really care how long they last, or is that not the inflationary input that they're really focused on? Is it more just the labor mismatch that we're seeing?
So I think it does matter, the tightness that you're seeing in product markets. If it continues for a longer period of time, and we're talking about things like semiconductors, where these could be continuing into mid-2022, towards the end of 2022, that's going to put continued upward pressure on prices, and that can push up inflation expectations, and then the Fed becomes concerned. But really, again, I would go back to the labor market, because ultimately in product markets, you can expand capacity, you can expand supply. What's harder to expand supply of is workers, because they're fundamentally in fixed supply. So I think that would be my concern if I were a Fed official.
Andrew, I'm still trying to understand why it is that the Fed is continuing with $120 billion of purchases, how it directly feeds into the labor market. Basically, is this a statement saying that the Fed has not successfully divorced the idea of taper from raising rates, from tightening, and that they will not be able to do that no matter what their communication is?
So I think you're not alone, Lisa. I think there are even some Fed officials who are with you that are looking at what's going on with very low levels of interest rates, house prices that have increased very dramatically, and saying, do we really need $120 billion a month of asset purchases? And is it really doing something for labor markets right now, which is the mandate where the Fed is still trying to make progress? So I think there are real questions about the kind of marginal benefit of doing continued asset purchases at this point, which is why they're being tapered down. Now, in terms of separating taper from tightening interest rates, yes, I think we're going to hear from Chair Powell. These are separate issues. But remember, Fed officials don't want to raise interest rates until they've fully tapered purchases. So I think there is a sense in which these can never be completely disconnected. It's still a hawkish movement, or a less dovish movement, maybe we should say, to wind down the purchase plan. And it does set you up for rate hikes down the line.
Andrew, the linkage here of the great Alan Meltzer of Carnegie Mellon back to your UCLA. I mean, come on. It's a huge deal. You were thrown the 2 volumes, Alan Meltzer, History of the Fed, and said, yeah, I'll read the introduction. Give me the history of the Fed right now, and the answer is they wait and wait and wait. They're as data dependent now as they've ever been, right?
So those volumes are on my bookshelf, Tom. I can't say whether or not I've read all of them.
Oh, good. I can say I have not read them, and I told that to Professor Meltzer once. Go.
But I think that is what the Fed is trying to do with this flexible average inflation targeting. The whole idea is we're going to wait until we actually see the inflation emerging, which we're seeing now. Now, maybe it's transitory, but we're certainly seeing those numbers now. And then we're going to wait until inflation expectations are moving higher. And we have seen those expectations move higher. University of Michigan, 5 to 10 year expectation sitting around 3%. Some of the other survey-based expectation measures also higher. So that is a sense in which Fed officials, relative to their prior policy, they're essentially trying to be behind the curve relative to where they would have been historically, just because it's been so difficult to get inflation higher. Now, when they start raising interest rates, that would say that they should have a lot more confidence in continuing to raise interest rates, because you've essentially waited for inflation to run a little bit stronger, for inflation expectations to pick up. And I think that's why they're thinking about, another 18 months or so before they're raising rates. You're really waiting until you're, towards the end of 2022 or the beginning of 2023.
Andrew, how does the dot plot help them achieve those objectives, this new approach?
Great question.
I'm not sure that every Fed official would feel that it does help them achieve their objectives at this point. I mean, we're going to get a 2024 dot in this summary of economic projections. We think it's going to be around 1.6%. Now, for the market, of course, this is out in 2024. It's a median, right? When I say 1.6%, that's the median. There's going to be a wide dispersion of dots. And so I think what you'll really hear Chair Powell doing is saying, look, these are far out expectations. They're contingent on how the economy performs, and markets shouldn't be kind of reading these as literally what the Fed is going to do.
Lisa, Alan Meltzer would have screamed about the dots. I know that for certain.
And we wouldn't read about it or listen to it clearly because nobody else here has actually fully read his documents. I will say, Andrew, just to sort of tie this all together and to move from the dots to the real world, when is September actually starting? What's your sense, looking at the real world data, in terms of how long the reopening has been pushed back by the Delta variant, by the concerns that we're seeing slow some of the service sector reopening?
So I think you're definitely seeing that in the travel sector. That's where it comes through most clearly. If we look at where we thought not really only domestic travel, but also international travel, which has just clearly been held back by this. And we're hearing from airlines about canceled flights or flights that are pushed out. Now, some of that may be only pushed out a few months, but of course, that's contingent on what the public health scenario looks like a few months from now. So that's very clear in travel. Outside of travel, we're actually seeing demand holding up relatively well. And a lot of the growth that's being pushed out of Q3 and Q4 comes back to those supply side issues. If you look at, only 13 million auto sales in the month of August at an annualized rate, much lower than expected. And that's purely a supply issue. At some point, that semiconductor situation will normalize, that growth will come back. But then as an economist, the question is this, Q3 growth that's not happening and moving into Q4? Or are we pushing this out into 2022 at this point?
Andrew, thank you. Andrew Hollenhorst there on the week ahead, the year ahead, Citi Chief US economist, and looking ahead to 2024 as one of the dots maybe this Wednesday. Tom, when they went from ex ante to ex post, from forecast-based to outcome-based, why didn't they just drop the dot plot altogether?
It was discussed. It was discussed. The most important meeting I've ever had in the dot plot was with the wonderful Richard Berner of Morgan Stanley, giving his public service to the United States of Treasury for a good amount of time. And Richard Berner said to me, "You've got to be kidding me."
This could really complicate the mission this coming Wednesday. Let's be clear about that. What is the mission right now? Well, there are several, but Lisa, ultimately, they're trying to divorce a decision on QE from a decision on interest rates or guidance on interest rates. The dot plot could really complicate that this coming Wednesday.
Yeah, especially because you do have less dovish. I don't want to call them hawkish, but less dovish members of the Federal Reserve that might put a dot on the higher end, which could potentially freak out people in the markets. I don't see how they can divorce these two things, John, because ultimately, once they stop buying bonds, they are ready to go if they want to raise rates. And I think that's what the market's going to look through. I don't see any sign that they're going to be able to separate the two.
It's one of the Bloomberg surveillance rules that on this program, we don't observe hawks at the Federal Reserve. There are doves, Tom, and there are super doves. Doves and super doves. There are no hawks left at the Federal Reserve.
See the Michael Wilson note this morning, John?
What did he say, Tom?
He says 20% is now within the realm of possibility down.
Drawdown.
Serious comment.
Well, which really raises a question. When is it a dip that's buyable, and when do you let it go to reach the bottom?
That's why people watch, Lisa.
It's a question to ask through the week. Equity futures on the S&P down 58. We're negative 1.3%.
Triple leverage all
in a bond market, yields in 3 basis points. Defensive this morning, 133 on 10s from New York.
You know what's great?
This is Bloomberg.
With the First Word News, I'm Rishka Gupta. The fate of President Biden's economic agenda is largely in the hands of House Speaker Nancy Pelosi. She has to find a way to keep the Democrats' moderate and progressive wings moving towards her goal. Over the next few weeks, she has an agenda that includes the president's multi-trillion-dollar tax and spending bill. She also has to find a way to avert a government shutdown and a Treasury default. British Prime Minister Boris Johnson is heading to the US, his first trip outside Europe since the pandemic began. His most critical relationship, that with President Biden, is at a delicate juncture. A three-way deal to supply nuclear submarines to Australia has reinforced the idea of a special bond. Johnson needs the president's support ahead of an upcoming global climate summit the UK hosts. After several false starts, bankers are finally getting back to their desks in the City of London at HSBC's Canary Wharf headquarters. Traders, salespeople and close support staff have been told they are expected to be at their workstations 5 days a week. Meanwhile, occupancy at Goldman Sachs' office is at around half and continuing to rise. Amazon is vowing that it has zero tolerance for graft and will investigate all allegations of corruption. That's after a report by an Indian news outlet that the e-commerce giant has beginning an investigation into claims of bribery. According to the news site Morning Context, Amazon is looking into accusations that legal fees paid by the company have been used as bribes. The new Universal Studios theme park in Beijing is an instant hit. $99 tickets for today's grand opening sold out last week within 30 minutes of going online. The park opened at a time when President Xi Jinping's government has taken aim at fan culture. Global news, 24 hours a day, on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
If you look at China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
From New York City.
We're here in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The growth story in cannabis remains very strong even after the loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
We would hope that ultimately, when we get the proper vaccination to everyone, when we get a more extensive distribution of the boosters, that it will have an effect of stopping the spread. But the goal of this particular decision was to prevent people from getting serious disease who are at risk.
Dr. Fauci on ABC over the weekend. From New York City this morning, good morning. Tom Keene, Lisa Bravis, Jonathan Ferro. This is Bloomberg Surveillance, and here's the price action. Kicking things off this Monday morning defensively. Equity futures down 57, negative 1.3%. The pressure point here, the tension coming out of China, Evergrande the focus, coming into a critical week for that company. And that means Asia gets hit, spills over to Europe, spills over to the US, defensive in treasury markets. A haven bid there, 132.77 on 10s. Yields in 3 basis points. That's the market. Here's a headline, a red headline across the Bloomberg terminal. The Pfizer-BioNTech shot safely bolstered COVID antibodies in kids aged 5 to 11. Let me read that again. The Pfizer-BioNTech shot safely bolsters COVID antibodies in kids. Here's the story, Tom. In a trial with 2,268 participants, 2 shots of a 10 microgram dose, that's 1/3 of the adult shot, produced antibody levels comparable to those seen in a trial of 16 to 25-year-olds who got the adult dose, this according to the companies, with similar side effects. So that's the view forward, Tom. The view forward now looks like this. The company's now seeking emergency US clearance for kids aged 5 to 11.
Yeah, that's the story forward, is the emergency clearance. But I'm really quite taken, John, with the comprehensive nature, the larger size of the study. You mentioned 2,000 people, and I really want to go within these headlines and this breaking news to just the actual granularity of this, which the New York Times captured a number of weeks ago. And it comes down to people like Marisol Gerardo, who was 9 years old. And there's, you know, the photograph of her getting taken. John, there's some courage involved here.
The issue to try to get back to normal. Lisa's talked about schools getting back to normal, Tom, and as we've seen through the first couple of weeks of schools trying to get back to normal, that's difficult.
It is, and the testing continues, and certainly it's really constructive. Let's go to Amber D'Souza now. We are hugely advantaged to speak to her right after this announcement with Johns Hopkins Bloomberg School of Public Health. Amber, this has been expected, but then there's more to come. What is more to come now? Is it just more study, more testing?
Well, we have been waiting to see the data in children. So this is really exciting to see the beginning data come out. With an infectious disease, it's very hard to stop transmission without also vaccinating children because they can continue to spread it. So everything we know about the biology of SARS-CoV-2 suggests that it would likely be effective. These vaccines would likely be effective in children, but this is the first data, and it's important to figure out the right dose. We need to look through all of the data that's provided in the trial, but this seems like a really exciting development.
In the right dose, what are the side effects that you're worried about? What are they studying for in terms of side effects? Is it simplistic like heart inflammation, or is it much more subtle?
Well, the great thing about a trial design is you're open to any side effect, even one of those you might not have expected, right? So all the same side effects that are seen in adults would be monitored, but there might be other side effects in children, and those would be captured with the reporting system. So these trials have considered different doses. Sometimes with children, they need the same dose as adults, and sometimes it's a smaller dose is the right dosing. So this data that's been released today looks like it's for a smaller dose, and it's shown to boost antibody responses and not have high side effects. So we'll have to wait and see what the other dosing schedule suggests, but I'm sure that information will be submitted for consideration.
Amber, what's the time frame from seeking emergency approval from releasing this data for the first time to emergency approval and actually getting kids aged 5 to 11 vaccinated?
That's a great question. Last time it took around a month, so that is very fast for normal processes. So it might be a month, it might even be a handful of weeks, since this builds on previous data for a similar vaccine, same vaccine, different dose, but definitely not this week. It would take weeks.
There's also the issue of the complicating factor of booster shots and the idea that supplies now have to not just meet the millions of kids who would be eligible, but also people who might be eligible for additional shots. How does this sort of work out in terms of prioritization and supplies that are currently available?
Yeah, there have been planning around that point. If the demand for boosters hit at the same time as the emergency authorization for children, there might be, slight challenges getting an appointment for the short term, like we saw with earlier rollouts for a week or two. But there has been a lot of planning. We have a good amount of vaccine, so that that situation would not last. We definitely have enough vaccine to extend to children once there's an emergency authorization.
On a Monday morning in September, as we move inside with a bit of a chill, what is the trend of vaccination in the country? I mean, we had a benchmark of 1 million a day. It dipped down below that. It came back. Where are we on vaccination right now, Dr. D'Souza?
It's very slow. I don't remember the exact number this week, but it's, less than 1% of Americans every week getting vaccinated. It's a slow proportion. We are getting additional people, but the progress has been very slow now for months. So the people who are currently not vaccinated, there's not as much appetite, but there is a interest by many younger individuals who have not yet had the ability to get vaccinated. So I think once this data is reviewed, if emergency authorization is given, it's clear that there are many parents and children interested in vaccinations.
Yep. Doctor, there might be some parents who are hesitant about using a vaccine that is being used under emergency use authorization for someone young as 5. What would you say to them?
Well, the reason that it hasn't been available for children is because we've been waiting for this data. And so, I think I certainly have confidence in this process, and the data seems strong from what the headlines have said, but it'll have to be fully reviewed. If the FDA grants emergency use authorization, that means they're very confident in its safety and utility. And every parent will have to make the decision, but we know that the mild side effects associated with a vaccine, if any, and the majority of people have no side effects, pale in comparison to all the other outcomes we're seeing. So I expect there'll be many parents very interested in the vaccine for their children.
Doctor, thank you. We do have to leave it there. We appreciate your time this morning on an important story. Amber D'Souza there, Johns Hopkins University Bloomberg School of Public Health, Professor of Epidemiology. This headline coming out then in the last couple of minutes, Pfizer-BioNTech saying its COVID-19 vaccine is safe and produces strong antibodies in children as young as 5 years old in a large-scale trial. Next step, Tom, as you know, Pfizer-BioNTech to seek emergency U.S. clearance for 5 to 11-year-olds.
Yeah, well, just more research. And I can't, the complexity here, John, and what this really comes down to is you mentioned it's 1/3 the dose of adults. Well, it's easy to trot that out on media. It's another thing to make a scientific guesstimate of the range of potential success on dosage and what it means for the body and the body weight. So it takes time to do this.
Another story just to watch through this morning, through the week, through the next month. Tom, front and center, though, is this market. Equity futures down 59.
Yeah, front and center is China.
1.3%, without a doubt. Treasury yields come in 3 basis points to 132.77. We got a Fed decision on Wednesday, but no one's looking down to DC. Right now, we're looking across to Asia, to China, to Evergrande. From New York City, this is Bloomberg.
Boosters work, and they will definitely help. The boosters, both the Moderna and the Pfizer booster, take antibodies back up to at least where they were, and probably twice or 4 times where they were at the peak. It's definitely teaching your immune system to recognize Delta better. The antibodies that people are making after a booster, they are better antibodies. And they're also probably then better antibodies at recognizing other variants in the future. If you get infected once, your immune system says, all right, here's how much I want to set aside of memory, right, to not get that again. You get infected twice, your immune system says, well, that didn't work, right? It should probably up that some. You get infected 3 times, your immune system is like, all right, this is a problem. It's really worth not getting sick anymore. And so the vaccines are essentially that, right? And if the immune memory was pretty good after the second one, what's probably going to happen after the third one is that it's going to be more stable. Even if the peak is the same, you're going to keep more of it for a longer period of time. It's a race, right? It's a race between the virus and your immune system.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The financial markets are telling the reverse of this spring, which is re-acceleration in the fourth quarter.
Sure, the consumer is really robust, but there are also issues affecting consumer demand.
It's a lull before the storm, before the Fed in particular needs to act and do something.
This is the perfect time for him to announce tapering.
because things are so quiet.
The Fed's response function is likely to move in a more dovish direction next year.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
What a week we've got coming up for you. From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Browitz. I'm Jonathan Ferro. We're down 1.4% on the S&P. We're negative 61 points. This bond market has a bid. Tom Keene, it's all about Evergrande.
It's all about Evergrande, and it's all about equities, bonds, currencies, commodities. John, everybody in the pool today. I'm going to go to the litmus paper of the equity system, and that is the VIX on the S&P 500. Instantly, John, halfway from 20, so what, out to the angst of 30. We're at 25 VIX.
The chairman of the Federal Reserve, Tom Keene, should just pick up the mic on Wednesday, say, I'll be gone until November, and drop the mic again and walk away.
And then Mike McKee will ask a rude question. We'll have full coverage, of course, and provide perspective. And again, John, you nailed this last week. I missed it. 2 meetings beyond this to the end of the year.
November into December. And Lisa, for the chairman, why would you make a decision this Wednesday?
All right, I'm going to push back a little bit. There is this question of inflation weighing on consumer sentiment. We have seen that. It is a question also of consumers starting to push up their expectations for inflation and how that bleeds into reality in terms of inflation picking up. These are some of the concerns they have to address.
If I had to put you on the spot then, evolution of the language in the statement or a real decision? Which one?
Evolution, because right now there's not necessarily any need in terms of markets.
You're talking British now? Evolution?
I just was, I mean, he said evolution.
They were the choices, Tom.
What is this, the Emmys?
What was I supposed to say?
Monday morning, good morning. Here's your price action. Down 60 on the S&P, 1.4% on the S&P 500. Let's whip through the price action for you. It's defensive out there. Yields are in 3 basis points on 10s to 133.11. The Hang Seng getting absolutely battered over in Asia. Markets hurt. In Europe, markets hurting. Take a look at the DAX over in Frankfurt, Germany. We're down by 2.3% there. Yeah. Euro dollar, Lisa, on the cusp of breaking 117. Could see a 116 handle, 117.11.
We could try to get excited about that. It's, oh my God, 117, oh my God, 118. I mean, honestly, the narrow ranges have been really remarkable. Even today, is this the drawdown to buy, or are we looking at a potential for a 20% correction like Mike Wilson over at Morgan Stanley is seeing the potential for? Today, I am focused on inflation, how much that weighs on sentiment. Beginning at 10 a.m., we get the NAHB Housing Market Index. It has been around the lowest in 13 months. The expectation is for it to continue this way because of the labor market disruptions, as well as some supply chain constraints. This, to me, is one of the interesting themes, how this plays into the Fed decision. Today, there will be traffic in the U.S., the UN General Assembly kicking off a week-long gathering in New York. Also interesting to me what the world leaders are going to say about COVID, not only with respect to their policies and helping some of the vaccinations, but also getting together in person at a time when people are worried about potential transmission of the Delta variant. Also today, energy companies and the UK government are holding a third day of crisis talks as you do see natural gas futures in the United Kingdom basically triple in the past year. Again, this goes to sentiment. If gas prices, if heating prices are climbing this much, if that disrupts the food chain supplies in the UK, how does this feed into sentiment? And at this point, what do you do in terms of monetary policy, since it is a totally different issue, John?
Lisa, seeing people's faces when they remember what week this is for the UN General Assembly and they live in Manhattan.
Like, oh,
the expressions are all the same.
Yes.
It's,
yeah, well, I mean, come on,
again,
it's horrible.
The traffic.
Map.
That's
horrible.
the one we really care about, TK. The traffic in Manhattan through this week. I know it's a New York problem, Tom, but it's brutal.
Folks, to give you an idea, you get out of Lexington and you get in a cab and you go 1.5 blocks. You pay the cab driver, get out of the cab, and you walk a block. Then you get another cab and you do it again if you're trying to get to the Hilton Hotel.
A week
where
ahead.
you and everyone else is an hour late for a speech.
Something like that. We'll try and get through it with you here in New York City. Equity futures then down 60 on the S&P. We're negative 1.3%. Where was the VIX, Tom? 25?
Yeah, 25. Dean Kernet said he wouldn't come out unless it was elevated.
Well, it's at 25 now. So here's Dean Kernet, Macro Risk Advisors founder and CEO. Dean, let's start there. The significance of a 25 VIX. What is it, Dean?
Well, it's the New York City UN week equivalent of a traffic jam. It's a lot of folks looking to buy protection at the same time. And, you know, what we see in markets and also in this discipline called hedging is sort of some sense of boom and bust. We've gone through this period of just epic quiet in markets where the ability to finance hedges, even at low costs, has just become intolerable for folks. You know, the S&P this year is running at a 2.5 Sharpe ratio. that's unreasonably high. And the flip side of that is the cost of hedging, which has been unreasonably high as well, just in terms of what to absorb. And so it's a difficult time because it's challenging to pay the freight, so to speak, on hedges at a time when it's clear that some uncertainty in many different aspects of the risk environment is building.
What do you predict the hedge cost will be forward? For our global Wall Street audience, this is a huge, huge concern. Is it going to get more expensive to hedge?
Well, I think it really comes from the feedback you get from markets. It comes from the day-to-day swings. We've almost had a year without a 5% drawdown. That's a long, long stretch. We're about 3/4 of the way there to a 5% drawdown. Today's a 1.3% move down in the S&P. We haven't seen a bunch of 1% moves in a long time. So it really comes down to the day-to-day swings. That's what drives the cost of hedging. What I'd also say is the VIX tends to be these days more a reflection of out-of-the-money insurance, which has been very, very costly. There's this concept called skew in markets. It tells you how expensive out-of-the-money options are. And so what I would say is because those have been so expensive, what investors are hedged for is more of a localized drawdown, a 3 to 6% drawdown, but nothing like the 20% that Mike Wilson is talking about. We're not prepared for that sort of drawdown.
I know, Lisa, you want to talk about that. I just want to make clear, folks, on Monday, we're kurtosis free.
Thank you. I appreciate that, Tom. Now, moving from kurtosis, though, to this question of a drawdown, are we going to see, a 4 to 5% versus a 20% correction? The idea that what is priced in is the expectation for a pretty shallow drawdown. What's the tipping point? I mean, this to me is really the reason why you ask, when do you buy the dip versus when do you take a step back because it has a lot further to go?
All the things that we worry about, whether it's an external factor like China, whether it's Delta, there's so many things that are on our list, our mosaic, so to speak, of risks. The brightest line we can draw is a faltering of earnings. And if you look at Q2 earnings, not only were they strong, but profit beats were exceptionally high. So that, to me, is the chief vulnerability is just a decline in earnings that people can't look past. I think another thing that's really up there, and of course you guys have been covering it, is just the Fed, and just this idea that as the Fed enters into a less generous cycle with respect to markets, it becomes part of the problem potentially, not part of the solution. If we look at the last couple of risk-offs, the Fed's always been there. They've reversed policy. They've taken on a new easing stance. And this just seems to be a trickier time for them.
But Dean, all of this stuff is known, right? I mean, this is the real question, that all of these are the sort of situations that people have been expecting for so long. And people are basically looking for that drawdown. At a certain point, isn't the pain trade for things to go higher versus the expectation right now?
It's certainly been the pain trade. And markets can get stretched in one way or the other, well beyond what you think the fundamentals can dictate. And again, when I just step back and I look at the big picture of asset prices, I see a world in which we've just pulled a lot of things forward. We've capitalized asset prices at exceptionally high PE ratios. A lot of that's, I think, due to the low interest rate environment in which we live. It forces people to do things like selling volatility to generate incremental return. And so to me, a vulnerability is price itself. It doesn't mean that a crash is coming, but if we look at a couple of the PE-led valuation declines, go all the way back to the mid-70s, the end of the Nifty 50. You had a 2-year period where the S&P lost a lot of percentage, the end of the tech bubble. Again, not cataclysmic. It didn't create a credit contagion, but you can certainly tear through a lot of index points on the back of a normalization of PE ratios.
Dean Kearney, you mentioned out of the money and the bet here, the bet forward, trying to make a big bet. Nassim Taleb codified and fooled by randomness and forward. The idea of not betting big money, but betting many small amounts of money. Is that what people are doing right now?
That's hard to say. Diversification is never something that someone feels they have enough of once you get a big risk off. We all suffer from this hidden correlation. Our bets tend to become more correlated, especially when volatility gets introduced to the market. So diversification is kind of elusive. We're all led to the same sorts of strategies, and I would say those are, in this grand scheme of carry strategies, the ones that make money most of the time. but when they lose, they're losing on an asymmetric basis. To me, that's a worry, is that are we set up in a hedged fashion, as you say? Are we diversified sufficiently? And I would say in a world of epically low interest rates, 100+ year low interest rates, I think that's kind of the dividing line. The risk that we're mostly unhedged for is this rise in inflation. It's in front of us. It certainly could be some version of transitory, but the evidence is, piling up that this inflation is here to stay in a lot of ways. And again, stepping back, you have a 1.3% 10-year set against, again, take your pick, 3, 4, 5% inflation. Yeah. Boy, that's a really tough deal to contend with.
It's a real point of tension for this market, Dean. Thank you, sir. Dean Kerr, Macro Risk Advisors, founder and CEO. It's been the #1 risk for a lot of people through the year, Tom. If we have this inflation dynamic that pulls the Fed to the party, so to speak, don't know how much of a party it would be, and they had to hike interest rates before they hit their employment goals, that's not the kind of tightening you'd want to see.
But the ambiguity there, John, is if you get higher inflation with stable or actually quite good GDP.
Then that's different,
Tom. That's a complete mystery of Q1, Q2.
There's a mystery in Evergrande, and that's driving this market this morning. Good morning to you all. Equity futures down 58 on the S&P. We're negative 1.31%. A bigger focus on China this week, going into a Fed decision this Wednesday. Yields in 3 basis points, 133.28 on 10s. Futures a whole lot softer. Equities in Europe not looking good at all. On radio, on TV, this is Bloomberg.
With the First Word News, I'm Rishika Gupta. New findings out this morning could clear the way to begin vaccinating grade school kids within months. Pfizer and BioNTech say their coronavirus vaccine was safe and produced strong antibody responses in children aged 5 to 11 in a large-scale trial. Pressure to immunize kids has been on the rise in the U.S. President Emmanuel Macron is making it clear that France is still angry over that submarine deal. Australia cancelled a $66 billion agreement with a French company in favor of a new defense pact with the US and the UK. Macron will speak with President Biden in the coming days, and French officials have been renewing Macron's calls for Europe to boost its own defense capabilities. In Canada, Prime Minister Justin Trudeau appears set to retain power in a close election today, but he may fall short of regaining the majority in Parliament that he wants. Projections based on national polling averages show that Trudeau's Liberal Party is likely to win 155 of the 338 seats in the House of Commons. The opposition Conservatives are likely to win 119 seats. In Spain's Canary Islands off northwest Africa, a volcano erupted over the weekend, forcing the evacuation of some 5,000 people. It took place on the island of La Palma. News reports say about 100 houses have been destroyed, but there have been no injuries. Lava flows are moving towards the sea at a speed of close to a half mile an hour. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Angela Merkel, after 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Well, there's always a possibility that the vote will get delayed. But the question is, are we going to work to get to our goal for September 27th? Yes, you're going to work hard to reach that goal. And sometimes you have to kind of stop the clock to get to the goal. We'll do what's necessary to get there.
Jim Clyburn there, the majority whip from New York City this morning. Good morning. Tom Keene, Lisa Abramowitz, Jonathan Ferro. This Monday morning, we pull back worldwide in global equity markets, starting with Hong Kong into Europe and over to the United States. S&P 500 futures down, let's call it 60. We're negative 1.34% on the S&P 500. Into the bond market, defensive move, yields lower 3 basis points to 132.94. Dollar stronger, euro dollar back to 117.08. And crude suffering a bit as well. We're down 2 percentage points there, Tom, $70.55.
Interesting dynamics right now, John. I'm, not just using the VIX as a litmus paper, but just simply S&P futures. I'm going to make the statement they have yet to find a bid. They're stasis, but we don't have a bid yet on S&P futures.
Lisa asked the important question earlier this morning. How do you know the dip you want to buy and the difference between that and the dip you want to avoid? And I always say that people always have a plan. And in the words of Mike Tyson, Tom, they always have a plan until they get punched in the face. And it's a little bit of a jab this morning. Wouldn't even call it a right hook. Equity futures down 1.35%.
There's a thing called a setup, and people make jokes about setup, and usually they're people that haven't enjoyed losing money like I've enjoyed losing money. And John and Lisa, this is to your point. Everybody on the street, whatever their time length, has an individual and personal setup. John, are they being tested this morning?
Lisa liked that.
Maybe.
Lisa liked that setup.
Just wondering. I'm just wondering, honestly, what analogies, what additional sports analogies? Let's bring in some more sports. Let's bring in a cricket analogy next time. I think that would be good. Honestly, though.
On the back foot, Lisa.
There you go.
That's
there
the
you
cricket
go.
Analogy.
No, but just to your point, in terms of when you buy this drawdown, Dean Kernet pointing out that all those hedges are just for a 3 to 5% drawdown, not a 20% drawdown.
Yep,
there is a tipping point there that's important to watch, Tom.
Yeah, and the rehedge would be interesting if we see that come down. Thank you to Dean Kernet. Right now, we look at the hedge in Washington. We do that with Emily Wilkins of Bloomberg Government. Emily, Mr. Clyburn of the 6th District in South Carolina is a majority whip. I learned in the movie Lincoln with Daniel Day-Lewis that the majority whip is a sporting effort to round up the votes. How does James Clyburn round up the Blue Dogs? It's a great band.
I mean, he's got to worry about the blue dogs, which are the more moderate Democrats, as well as the more progressive Democrats in his party right now.
You got to do both, but how does he round up the moderates to appease the speaker? This is good. I want Tommy Lee Jones to come in and save the day.
Well, look, this is going to honestly be a big headache for Speaker Nancy Pelosi. I mean, the September 27th deadline that has been put out there, right now, it doesn't look like they're going to be able to get that reconciliation package, that social spending package done in time. That means progressives have said that they're not going to vote for that bipartisan infrastructure if they can't get the social spending done. But then we're hearing this morning, Politico reporting that Senator Kirsten Sinema told the White House that if the vote isn't done on the 27th, or if it fails on infrastructure, then she won't support reconciliation, which means reconciliation's not going to get done. So there's a lot of pressure, a lot of posturing right now that we're seeing both from moderates and progressives. And as the House finally comes back to D.C., they're going to physically be in the Capitol for the first time in weeks today. There's going to start being those personal conversations, those backroom discussions, that sausage making, trying to figure out a way, if there is a way, for Democrats to get to yes here. I mean, this is it. This is the ultimate crunch time.
Emily, the sausage making is exhausting. So exhausting that people hear the debt ceiling debate every single time it comes up. They know it's going to be, you know, a nail biter down to the end of the wire, and then somebody's going to capitulate, and it's not going to happen because it's a nuclear option. Should we care about the debt ceiling deadline this time around, or is it the same old thing?
I think to a certain extent, you always have to care about the debt ceiling deadline. Treasury Secretary Janet Yellen really laid it out in an op-ed in the Wall Street Journal over the weekend, emphasizing that this would really cause chaos for a lot of Americans, that it could boost up inflation, that it could lower stock prices, that it could hurt sort of the average American families. And she's really trying to make the point that this is something Congress needs to take seriously and get done. But Congress is doing what Congress has done so many times with the debt ceiling. They're playing politics with it. And so far, both sides have not given in. Democrats are saying, Speaker Nancy Pelosi just over the weekend, saying that she expects Republicans to come along and to vote for it. But Republicans, they want to be seen as that fiscally responsible party. They don't want to have another debt ceiling raise on their fingers. And so they're saying absolutely not. Democrats are going to have to go it alone on this one. And look, I mean, we have a looming October deadline to get this done. We don't know the exact date, but before then, we have to figure out what's going to happen with infrastructure. We have to figure out potentially what's going on with that social spending reconciliation bill, and we have to temporarily fund the government, because otherwise on October 1st, we'll have a government shutdown in the middle of all of this.
Emily, I got to say, when I hear about Janet Yellen talking about how this is going to jack up prices, I remember what happened when the U.S. actually defaulted, and it ended up being the exact opposite. You saw yields go down because it was a flight to safety, because people didn't know what was going to happen, and it's unclear whether that would be different anytime this time. At this point, where are people's focuses? Is it in the $3.5 trillion bill, or is it really in getting past this hurdle that a lot of equity analysts actually have been focused on more than usual this year?
I think in D.C., definitely the debt ceiling is a big part of the conversation. But if you just look in terms of deadlines, the things that they're focused on right now, the thing the House is doing when they come back is passing that short-term spending. So they're not going to have that government shutdown, and then trying to figure out what's going on between infrastructure and that social spending reconciliation plan, because the 27th is coming up next week, and they're going to need to have everyone on board before then, or Democrats are potentially going to suffer a very humiliating loss for both them as well as President Joe Biden.
Emily, thank you. As always, Emily Wilkins down in Washington, our Bloomberg government reporter. And as always, Tom Keene, playing politics once again, Democrats, Republicans, with the debt ceiling.
Well, they're there with the debt ceiling, but I'm going to go back to 3.5 trillion, John, and how you migrate down. I mean, I grew up in a house where there was a complete panic every time the debt ceiling thing got up. Guess what? It got fixed. I'm way more interested, John, in the dynamics of 3.5 trillion down and what it means for tax increases, real and perceived by voters. I think that's way more important.
Down to 3, down to 2.5, down to 2.
My working number, you ready?
Go on.
900 billion.
900 billion.
Really?
Yep.
That's not consensus.
What gets you there, Tom?
Gets me there is history. They're just what's coming up are the elections in 22. I read every word of a fabulous report. I'm so sorry I can't cite it here, of the Indiana redistricting, of the depeopling of Joe Stiglitz, Gary, Indiana, and the repeopling of the hard left of West Lafayette, Indiana. And the 2-minute drill is redistricting, and the vote are going to completely subsume everything else.
If you're on radio, you're missing John Farrow's face as he's absorbing the redistricting of Indiana.
Taking it all in.
And where this is going.
I know that our manager's from Indiana.
Indiana's near Chicago, John.
There you go, thank you.
Usually when he brings up Indiana, it's because he's in trouble with our manager.
I love
Just wondering if that's what's happened this morning.
West
Which is why I'm
Lafayette,
smiling.
West Lafayette can't win at football. They got crushed by Notre Dame. But it is the new Madison, Wisconsin, a liberal oasis of sin in the Midwest.
What do they say, Tom? Boiler up.
Boy, you nailed that, John.
You like that?
Nailed that.
Thanks. Can we get back to this market?
No, I'd
Down
like the tots to
64
boiler
on
up.
the S&P, negative 1.44%. What does boiler up mean? Got no idea.
I have no idea, John.
From New York, this is Bloomberg.
China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
What a messy start to the trading week. Live from New York City for our audience worldwide on TV and radio, this is Bloomberg Surveillance, and here's the price action. Down hard in Hong Kong, spills over to Europe, bleeds into the US. S&P 500 futures session lows down by 1.46%, call it 1.47. Outside of that, and the Nasdaq, we're down by 1.37, and the small caps, the Russell, they're suffering, down around about 2 percentage points. Into the bond market, defensive, as you might expect. 2s, 10s, and 30s shaping up as follows. Yields in, curve flatter. It's the bull flattener in the bond market going into Wednesday and a Fed decision. Your 10-year right now, 132.43. 30s, where are we? Down 4 to 185.91. And here's the focus, TK. It's Evergrande. Couple of issues coming up here today. Some interest due on some bank loans. Thursday, some interest due on some bonds. Here's one of them. Just take a look at the price here. Switch up the board and get to the chart. For our audience on radio, it's down and to the right pretty aggressively and flat through most of the last year or so. TK trading at a third of face value on that bond that comes due this Thursday, that interest that comes due this Thursday.
Stay on that chart, folks. That's really important here. Riley, stay on that chart. Do something constructive, Riley. For on radio, all you need to know, and John's got an absolutely brilliant chart moving from 95, 98, and John down to the lower corner in the pricing of 22. CFA 101 on this is distressed debt works out at a banded range around 21. They're there now.
More than distressed now. Tom, for me, and here's the interesting point, and Jens Nordvik of Exante did a lot of interesting work on this over the weekend. Just going into the Bloomberg High Yield Dollar Index over in China, 2/3 of that are property developers. So when you're looking for contagion risk, it's hard to see it outside of that high yield benchmark because all you're really seeing is it bleed through property developers. This is the first day, really, we're starting to see the global effect of it. And I think that's what you've got to watch out for from there. Are we actually going to see some contagion? And is the main risk through the financial channel, a lot of people talking about financial risk, or through the real economy, Tom, when property makes up, what, a third of China GDP? That's the debate we've got to have through the week, a more nuanced debate, Tom.
Well, the nuanced debate is 20 miles from Shenzhen down to Hong Kong, and you just take Route 9, John, and curve around to the east to Route 2 by the old airport, now a racetrack, and that gets you there. That linkage this morning is new.
Something to think about. Onshore markets close today, close tomorrow. We'll get on top of this credit story through today. From New York, then, that's the cross-asset price action. That's one of the bonds to watch. Let's get you some single names, some stock movers. Here's Romain Bostic. Hey, Romain.
Hey, John. Well, of course, everything seems to be tied right now to the concerns about Evergrande and what's going on in China. Financial contagion, not necessarily, but there is certainly some contagion when it comes to risk sentiment here. Of course, you talk about that 3% drop that we saw in the Hang Seng. All but 3 of the 60 members declined on this day, and the ADRs of a lot of those companies here in the U.S. are weaker as well. Alibaba shares down about 3% here in the pre-market. ADRs here on the U.S. side here. And of course, a lot of the concerns here about Evergrande and the property sector, that's having a lot of reverberations for the materials companies. You're seeing names like Freeport-McMoRan, the big copper producer, lower here in the pre-market. Cleveland-Cliffs, of course, the big iron ore maker, also lower here. All the other materials names, whether you talk about Alcoa in the aluminum space, U.S. Steel in the steel space, even Albemarle, of course, a big lithium producer, all down 3, 4, 5% here in the pre-market in the U.S. Flip up the board here because a lot of that risk sentiment and the potential contagion in that space now weighing down on some of those large cap tech stocks. Apple lower here, as is Facebook. NVIDIA, Twitter, Facebook as well, down here in the morning. Tesla also lower as well, though some of the concerns with Tesla right now seem to be tied to a Wall Street Journal story about U.S. regulators raising some concerns, some safety concerns here about the self-driving features on some of the Tesla vehicles. Those shares down about 2% here in the pre-market. And keep an eye on Pfizer. Of course, the big news on Friday, of course, was the FDA advisory panel not recommending that broad-based use of booster shots. They did sign off on a more narrow version of that. The full FDA still has to make a decision on this, but those shares slightly weaker here on the day, down by about 1%.
Romain, thank you so much. To close this afternoon off an eventful day, and SPX now down -72. The VIX goes out to a 26 handle. This is perfectly timed. Laura Rame, among other things, survived 28 below zero in Lewiston, Maine at Bates College. She went on to a sterling effort in foreign exchange, and it makes her a twisted and different chief U.S. economist for FS Investments. Laura, I love at the back of your research note, you show the equity sensitivity to interest rates of value and growth. In this turmoil, this set of things we do now, how does your economics world fold into the Lara Rame markets world?
I think that is what we're going to see as especially focus on the Fed right now. Just around the world, yield curves are so flat. Whenever there is a wobble with growth, and we are seeing more than a wobble right now out of China, the U.S. curve flattens hard. It just all reverberates back into the U.S. So what does that mean? Coincidentally, I think everybody's sitting around here wondering if we're going to get the big sort of awaited correction lower in U.S. equities. Maybe caught wrong-footed if we just continue to see U.S. interest rates that are compressed lower. And that, I think, is the paradox of what's going on. We've got the Fed, clearly edging towards the taper. We have U.S. growth still solid, but decelerating somewhat. And everybody's wondering why, U.S. equities are hanging in there. It's really about the interest rates.
Laura, talk to me about the broader economy outside of the United States. Mentioned China a few times already this morning. A lot of the growth scares we've witnessed over the last 10 years have been born in China. This might be the beginning of one. I have no idea. Walk me through the risks you see on the horizon from the Chinese economy and the likelihood that they bleed into the U.S. one.
I mean, how much time do we have, right? I think
about 4 minutes.
I think we can go on to 4 minutes.
4 minutes, Laura.
4 minutes, go.
Do your best.
You've got so many of the conflicts and the issues that we have with China are because we are a capitalist society and they're a command economy. And I think that gets really challenging when our financial systems are so linked and the philosophies behind them are so very different. We've somehow managed to get through China's, tech wealth reduction that we've seen from this incredible downward correction in equity markets there. And we haven't, it's sort of, you've been waiting for all of this to reverberate to the U.S.
But Laura,
so I think, yeah.
I don't mean to cut you off for your 4 minutes, but is this an economic issue or is this a financial issue? And the idea that previously it was a financial interconnectedness that didn't happen. This time we're talking about supply chain disruptions with direct economic ramifications.
But that's exactly right. So, and that's the economic piece of this, which is that for so long, the idea was that a strong U.S. economy was enough to just pull China higher. And now you really have this two-way street, and China has been not as clearly the entire region hasn't been able to get COVID under control as they'd hoped. We never got a full sort of production reopening. All of a sudden, all of these economic interdependencies just look increasingly like weaknesses, and that's what we're seeing.
You're going to put me in the wrong timeout chair, Laura, but I'm going to go there anyways. What's your dollar call given your economics? I mean, we're getting blah, 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 blah. Are you looking at it with certitude or ambiguity?
I'm looking at it. So, I'm the consummate dollar bull, Tom, and especially at no other time when we're starting to see, you're going to see, I think, emerging markets with the risk off is also having an impact. You're seeing the U.S. still managing COVID better than other developed countries. I'm still a broad dollar bull, but I don't think that the dollar is where the direction comes from right now. And that's what we're seeing, the same thing in interest rates. There's so much happening, but there just seems to be this eerie calm, right, in treasuries, in the dollar. And I think at the end of the day, it breaks out to the upside, but I don't think it's the catalyst.
Laura Rame there, the latest on this market, on this economy
too. 4 minutes.
I'm not sure we gave her 4 minutes. Lisa cut in. Lisa's so rude sometimes, just sort of cuts people off.
Trained by the best.
Tom Keane. We call him
Brad
TK
tells
the
me
best.
3 minutes, 50
He's the best at interrupting, Lisa, that's for sure.
Look, he's got soccer fans. He's got tennis fans.
He has that on his side now too.
Yeah.
Laura Rame, FS Investments Chief, US economist. And what to watch for? The number one question right now, is the risk purely financial, purely economic, TK, or a bit of both coming out of China?
But it's wrapped around a natural disaster, and the natural disaster, seriously, it's in Shenzhen, it's in Hong Kong, Singapore, Auckland shut down. You got the Pfizer headline today. We're doing all of this economics, finance, investment, John, wrapped around medicine
We are.
and a disaster.
But TK, I think in China it's much more than that. How do you reconcile the goals of this common prosperity goal of President Xi with what's happening in the property market?
Yes.
Is the solution for what's happening with Evergrande at odds with that big broader push from the Chinese leader? That remains to be seen. And Lisa, it's pretty clear to me that this authority, this Chinese Communist Party, wanted to put the brakes on the property market? Can you get a solution to one without harming the goals of the other?
This is the key point, and there's an economist quoted from Standard Chartered in a story that just came out on the Bloomberg saying, even though most people don't expect Evergrande to collapse all of a sudden, the silence and a lack of major actions from policymakers is making everyone panic. This is the key issue. When are they going to step in? And if they don't in the next few days, how bad could this get?
Someone much, much smarter than I brought up a really, really good point to me after I went through the Chinese data of last week. Retail sales was massively disappointing. It had a 2 handle. We were looking for a 7. And that person said to me, didn't you think it was interesting that that data got published? And I sat there and thought, you've got a point. And they turned around to me and they said the following, Tom. They said, if it's being published at a time when, remember, many people sit there and say China doesn't publish bad data. Well, they did last week. Maybe the signal is, Tom, they're okay with it. They're okay with it.
I'm just not gonna guess what's going on behind the red doors, John. I would suggest there is absolute certitude. I've heard this for well in excess of 20 years. People in China invest in real estate. It's their only outlet. It's allowed to blow up every once in a while, but right now seems to be a substantial blow up. Guess who's gonna come to the rescue?
It hasn't blown up yet. It's starting to. It's been burning for a long time. Let's be clear about that too. That's what's odd about this week, Lisa. We've been talking about this for how long now?
Yeah. Well, and I think that what this really highlights is how different the Chinese response is, and the fact that this time there could be economic ramifications beyond just financial transmission.
Futures down 67 on the S&P. We're negative 1.5%. Coming up, a man who has sat at this Federal Reserve staring down risks in China many, many times. It's Bill Dudley, former New York Fed president and Bloomberg opinion columnist. We'll catch up with him in the next hour. From New York, this is Bloomberg.
With the First Fed News, I'm Rishka Gupta. The fate of President Biden's economic agenda is largely in the hands of House Speaker Nancy Pelosi. She has to find a way to keep the Democrats' moderate and progressive wings moving towards her goal. Over the next few weeks, she has an agenda that includes the president's multi-trillion-dollar tax and spending bill. She also has to find a way to avert a government shutdown and a Treasury default. British Prime Minister Boris Johnson is heading to the US, his first trip outside Europe since the pandemic began. His most critical relationship, that with President Biden, is at a delicate juncture. A 3-way deal to supply nuclear submarines to Australia has reinforced the idea of a special bond. Johnson needs the president's support ahead of an upcoming global climate summit the UK hosts. A scaled-back United Nations General Assembly returns to Manhattan this week after going completely virtual last year, but many New Yorkers are less than enthusiastic. They're concerned the influx of visitors could lead to a spike in coronavirus cases. Meanwhile, hotel and restaurant associations are expecting only a modest economic impact from the General Assembly. Lufthansa wants to raise $2.5 billion through a heavily discounted share sale. The airline will use the money to help repay a German government coronavirus bailout. Lufthansa plans to return all of the $10.5 billion it borrowed from the government by the end of the year. And we want to correct comments made Friday on Bloomberg Television. Binance Holdings is the focus of the U.S. investigation into insider trading and market manipulation, not Binance U.S., which is a separate entity. And it was the former CEO of Binance U.S. who recently stepped down, not Binance Holdings. We've removed this clip online. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
I want to ask about your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just 2 girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience, because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
Happening on the ground right now, just in terms of consumer price tolerance.
We see a strong consumer right now, and you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, we see the evidence of that strong consumer.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It is essential that the relations between China and the United States become functional. And at the present moment, they are totally dysfunctional. And that, of course, has an impact on the capacity or lack of capacity to solve many of the problems that we have in the world because of the importance of these two countries.
The UN Secretary General, Antonio Guterres there from New York City this morning. Good morning. Tom Keene, Lisa Bramwitz, Jonathan Ferro, your equity market this Monday morning is having a tough time. It's messy out there. We're down 69 and negative 1.55%. It all started in Hong Kong. It's a very, very big week for Evergrande. The Hang Seng negative 3.3% at the close. Outside of that, equity futures softer across the board here. The Nasdaq down by 1.4%, much worse on a small caps. On a Russell, yields in 4 basis points. TK, your 10-year, 132.26.
Yeah, and one of the litmus papers, somebody emailed me and said, what are you watching given this? And sometimes I watch the long duration 30-year bond, John, and that's giving me a 186 to 4 digits, 1.8585, nicely in from the 2% level. We got a busy 7 minutes here. You need to stay with us with David Wilson and Ann Curran. Mr. Wilson, quickly on stocks. What do you have today?
Specifically industrial shares. Look at the last 4 months, and it's really been a reversal of what we saw over the previous year. And it's something that Jonathan Krisky over at Baycrest Partners pointed out. He says that group, the industrial stocks, remain vulnerable here. And it's understandable. I mean, you go back to May of last year, and the ratio between the S&P 500 Industrials Index and the broader S&P 500 was at its lowest level in like 2 decades. So then it picks up, moves up 21% in about a year. And now it's given back more than half the advance. And with the way that stocks are setting up today, it kind of looks like there's going to be more of the same coming for this group.
We got to be rude critically. David Wilson will join me in the 9 o'clock hour on Bloomberg Radio with the path to the opening futures, negative 70. Enda Curran from Hong Kong. Enda, good morning. I want you to explain to our international audience the disconnect or connect between Hong Kong and 20 miles north, Shenzhen.
Well, look, Hong Kong seems to be ground zero right now for this contagion with Evergrande, Tom. And I think that's the big question that everybody in Hong Kong is asking today, just how far and how severe will these contagion risks spread in terms of what's happening with Evergrande, in terms of what will happen China's broader property sector, and then, of course, will that spill over and have an impact on Hong Kong's own property sector too. So I think this week is a big week. Evergrande itself has some interest rate payments due, about 84 million worth of interest due this Thursday, for example. Everybody's keeping an eye on that, and everybody's also keeping an eye out to see if the government actually comments on this, because so far the government in Beijing has said little, if anything at all, on Evergrande.
That's the number one issue right now, and the interest comes due today on the bank loans, as you say. We talked about that over the last week, largely expected to be missed. On to Thursday, the interest due on those dollar bonds, and an onshore bond I understand as well, and a local currency one. Can you walk me through the discussions on the solutions so far, the reports you're seeing, what the solutions sound like, the potential solutions?
Well, so we know that there are some international advisors who've been appointed to this, Jonathan, including Houlihan Lokey, who of course advised Lehman on its own bankruptcy. Now, we don't yet know, we don't yet have clarity on what kind of solutions will be offered in the Evergrande case, but the appointment of those advisors in itself is clearly a very firm signal as to where this is going. On the repayments this week, the interesting question is whether or not that would eventually count as a default. There are those who argue if they don't make those payments this week that you just listed, that doesn't necessarily mean a default. It depends where the guarantees lie on which subsidiaries and the rest. But nonetheless, again, it will be taken as a big signal. And then I think the question becomes, at what point will we get a signal from the government in terms of how far or how deep are they going to let this pain with Evergrande run? And that will speak to the idea about what solutions may come out of it. So the first time we get some signals from the government, that will indicate where we're headed with this, I think, Jonathan.
But Enda, we're already getting a signal. The idea that they've let it go this far, that they've let the speculation go as long as they have. What is the signal in terms of their increased willingness to allow there to be pain, to allow there to be defaults, for allowing bondholders and frankly even property owners to suffer some pretty big losses?
Yeah, quite right, Lisa. Absolutely they have. Clearly, the markets have already done the pricing for the government. The government, we know, has been taking something of a hawkish stance on debt and leverage in recent years. This has been one of the central policy planks for the authorities in Beijing. But at the same time, though, there are economists today from the banks, from the investment houses saying, hang on a sec, we needed something of a clearer message on what is happening with Evergrande. That was a note from Goldman Sachs. We had some Citigroup economists talking about the risk of policy error. No government ever wants to be accused of policy error. And we had economists at the Societe Generale talking about a 30% probability of a hard landing. So while all of this fits the narrative that China wants to clamp down on debt and risk in the financial system, at the same time, people are asking how far can they let this go before it does start spilling over into the real economy. And of course, that's exactly what the government doesn't really want, this kind of negative loop effect.
Yeah, and what's the biggest concern among the analysts you speak to? Is it an economic risk with respect to the housing market being a third of the overall economy, or is this mostly a financial transmission risk?
I think real economy is really what people are looking towards, Lisa, because on the one hand, there's a clear spillover for China's own economy. So as these problems with Evergrande continue to deepen, the concern is what happens to inventory, all of the properties that Evergrande holds. If they're sold at a fire sale, does that depress broader property values? That brings down, of course, household net